Good afternoon, traders. How we doing? Welcome to the SPACs attack. Let's do it. I got my sidekick here, Chris Katje, the brains to the show. You guys already know we do this every single day when we talk about SPACs and IPOs. Today's going to be a great IPO day, but we also got some notable headlines. So I want to get right to it so that we can get to our guests later on. Let's go ahead. Chris, how are we doing today?
Hey guys, what an exciting Friday. We got lots of headlines to hit here. So let's kick it off.
Let's do it. Let's go ahead.
All right. So last night there was a new SPAC announced. This one's a pretty big one. It's coming from Liberty Media Corporation. That's the same company that owns the Atlanta Braves, Formula One, Sirius XM. They also own some travel stocks. They've got three holding trade right now. So this SPAC is going to be led by Gregory Maffei. He's the CEO of Liberty Media Corporation, Liberty Broadband, GCI Liberty, Liberty TripAdvisor. He's also the chairman of Live Nation, Sirius XM, and TripAdvisor. They're selling 50 million units, which also come with 1/4 of a warrant at that $11.50 price. So this one's going to be a pretty big one. It's going to raise $500 million. And then the sponsors also committed to buying 10 million warrants and $250 million worth of units. This one's going to trade as LMACU when it IPOs, and then it will split around 52 days after. They're looking for a company in media, digital media, music, entertainment, communication, or telecom. That's a pretty big dollar amount there, so they're going to find a pretty big target. I think that's one that people need to watch when those units happen. We have symbol GMHI. This is Gore's Metropolis merger acquisition. So they are merging with Luminar, which is a LiDAR company. They announced a deal today with Mobileye to supply their LiDAR technology for an autonomous vehicle series that's being put out by Mobileye. That one's running early today. And then we did have a new deal announced today. This one I'm pretty excited about. It's Longview Acquisition, LGVW. They are merging with Butterfly Network. It's a low-cost portable ultrasound company. The deal values the company at $1.5 billion. And shareholders of LGVW are going to get 20% of that new company. Butterfly Network is backed by Bailey Gifford, the Bill and Melinda Gates Foundation, Fidelity. There's some huge backers there. They also said they have a future pipeline of innovative technologies. But this is really all about that portable ultrasound technology that they have. Right now, that's an industry dominated by the big carts like General Electric and Philips. They have a device that's under $2,000. They have deals with the majority of the largest 100 hospitals in the U.S., and they're also tackling emerging markets. This one kind of reminds me of a recent IPO, NanoX Imaging, NNOX, which was a low-cost X-ray company with the smaller models, the razor blade model. That IPO really took off. It had a couple bear reports put out, which pushed shares down. But I think the appetite was there, and I think, this deal, I think shares are going to run higher. And I think that people should be excited about that technology and Bill and Melinda Gates Foundation being behind it. And then I want people to keep an eye on GIK. This is Gig Capital SPAC. Bloomberg reported a deal could be in place to acquire Lightning e-motors, so another EV possible SPAC deal. That one has not been confirmed, but people should keep that on their radar. And we have two IPOs today. So we have Maravai Life Science Holdings. This one's probably going to open well above the pricing range. So their original price point was $24 to $27. They are in the mRNA market. They're being used by Pfizer and BioNTech on their COVID-19 vaccine, also used by Fosun Pharma and CureVac. So 5 of the 26 COVID-19 vaccine trials that are using mRNA are using CleanCap, which is owned by Maravai. So this is a company that's going to be attached to those COVID-19 vaccines now. And I think this one could really take off today as it gets the press and the play off of that. And then we have Sotera Health. They are an end-to-end sterilization and lab testing company. Again, kind of the thing behind the thing. They work with biotechnology companies, and it's probably going to be valued at over $6 billion based on their pricing. They own Nelson Labs, which account for 40 of the top 50 medical device companies and 8 of the top 10 pharmaceutical companies as customers. They have over 3,800 customers just for that Nelson Labs segment alone. Revenue in 2019 was $778.3 million. And for the first 9 months of 2020, $601.3 million in revenue. And that's it for headlines today.
As you guys can tell, the man with the brains, Chris Katje right here, guys. Definitely, if you guys want to go ahead and find in the description below Chris Katje's Twitter, go ahead and ask him questions. DM him, bother him, let him know what you guys want to see. He'll go ahead and find the information for you guys. All right, guys, so let's go ahead and say hello to some of the people in the chat today. I'm seeing some of the loyals. You know, we got JK in the house, Aaron, Richard, Sheriff. We got Manny in the house, Francine. We got a whole bunch of the people that, you know, want to stick around, want to talk SPACs, want to talk IPOs. This is what we're here for, guys. At the end of the day, we're doing this for you guys. We're not doing it for us. You know, at the end of the day, Chris and I are going to keep trading and keep finding these investments, but we want to bring you guys the information so that you guys can find the trades that you guys can make the information, the right informed trade. And that's really what we're going towards. All right, guys, so let's get into some of the watch list today. Want to check out some of the IPOs that have been moving, and then we're going to bring in our interviewee. We got a guest here that's going to talk about IPOs, so definitely let's get into some of this watch list here. All right, guys. So first thing first, I want to just run through the SPACs watch list, and then we'll get to the IPOs. So one of the things that we mentioned, and we mentioned this stock here, GMHI. Guys, look at this stock up today, 13%. You know, really making a move here. If we wanted to go into a little bit tighter time frame, a little intraday time frame, look at this 15-minute chart here, guys. You got a straight up move here, right out the gates here. 9:15, 9:30 hits. It held for a second that 11 support, and now it's taking off up there now to the $12 price point. So definitely keep this one on watch. This is ticker GMHI. So go ahead and continue on moving through this one. Let's see what else we have moving today. Up 9%. One we've been talking about all week, guys. SPE. Switchback energy. This is one that we've been talking about often. What do you think, man? Chris, we've been mentioning this one for a while now.
Yeah, I have owned SPE for a while. I am up almost 100% on that. I did take a little bit off the table when I hit 100%. I know you mentioned that yesterday, Mitch. There's nothing wrong with taking profits. I'm going to run with the house's money. I still think this is a great long-term play. It's the charging infrastructure. It's a Biden play. If you joined our election night coverage right here on the Benzinga channel, this was one of my top picks for if Biden won the presidency. It's up 60% since that night when I called it. So hopefully some people were able to get in, after that next day. I think it's going to come back down a little bit. It still has to complete that merger deal, change over symbols. We've seen a lot of SPACs kind of trade down once that deal goes through and then start to trade up again, similar to like a Fisker. So be careful at these top levels here, but I still believe in the long-term play here. So I would look at any dips on this, if you believe in the charging infrastructure and the Biden play, this is a great one to be in. And I'm staying long with, the house's money here.
I can't blame you, Chris. At the end of the day, if you look at this chart and like you mentioned, we can look right here, November 2nd. This is this Harmy candle right here, and then we get kind of this green candle, and then we really got this kind of red candle, and then what did you see after that? An attempt to run towards the resistance. And what do we want to see when we get towards that resistance, guys? I talk about this on the show constantly. We want to see that volume pop, and that's exactly what you get there. That means buyers are taking control of this stock here, and then a nice continuation day through the $20 price point yesterday. And now you're getting up there towards, 29, 28 area. I think this is one that, at the end of the day has been it's been rocketing up, Chris, at the end of the day. I can't blame you for taking some profits. And like always, guys, I always recommend, always figuring out what your price target is and where you're going to go ahead and take that reward, because that's what it kind of is. It's not only a return, it's a reward, and you have to go ahead and take it if that's going to be your target. Okay, guys, let's go ahead and continue moving on here. We can get into some other SPACs here. Let's check out some other ones. I'm going to really quickly run through these so that we can get to some other stocks today. We got MP.
Look at MP taking off.
Look at MP, guys. This is one that we had, on here just 2 days ago, and then now all the way up there back to 17. There was a price point at around the 16 where I saw some volume really starting to come in. And let's go ahead and let's try to look at that a little bit closer here so we could pull up a 15-minute chart. And you can see these bottoms here at the 16. That's really what I was starting to notice, the pop back through that $16 level. And now that we're holding these 1650s, it's attempting to get through the $17 level. We are definitely starting to hit some resistance. So you got to definitely keep this one on watch and just kind of follow to see if it's going to break the trend. I'm starting to see this trend line here. So that's kind of what I want to see, if it can get back above 17 and have that nice big volume pop. If we get that nice big volume pop, I would be looking for maybe a move up there towards that 1850. All right, guys, let's go ahead and continue on. Moving on here. Let's move on to Ride. Ride up about 4, almost 5% here. Earnings confirmed here. You can see from Benzinga Pro. Well, it's unconfirmed, but it's 11 days from now. So we'll be expecting earnings on December 1st. So definitely keep that one on watch there, guys. All right, let's go ahead and let's take a look here at some other ones, some of the moving ones. We got Helion, VLDR, NGA also on here. Definitely, we got some stocks moving. And if you really look at it overall, let's say if we held this complete as a portfolio, the down ones are not that far down. The worst one we have right now is a stock that's pulling back from a major move, which was Fisker. This one had moved up all the way up there to 18 this week, and now it's pulling back towards the $16 area. But if we held this whole portfolio, we would essentially be in the green. And so this is the one thing that I definitely have noticed in SPACs, is that you have to learn how to diversify within them so that you can time a couple of these, get these 12% moves, get those 20% moves, and take some profits sometimes. It's one thing I've noticed is that you can't just rely on one of these. I don't like that kind of investment. It's too one-sided. It's putting all your eggs in one basket. And usually when you put all your eggs in one basket, what ends up happening is the basket drops on you, and then next thing you know, no eggs, just a whole bunch of cracked. So what I would pay attention to, guys, is definitely look to try to get a kind of a couple of these that you like. Try to get the story timed, and that's really what it's all about. What I've noticed, it's all about timing these. It's not necessarily that the story won't bring it back up. It's more along when is the drops going to come, when are the move ups going to come, and so you have to time it correctly. All right, guys, I want to catch up with the chat here. Definitely seeing some good people in the chat here. Want to say what's up to a couple people. I know we have some IPO talk that we want to get into, so let's go ahead and I'll check one out here. And this is someone new I haven't seen. Jess, I think we got Jess H here. Check out SPI chart. All right, let's go ahead and check it out right quick. All right, so SPI chart really moving on up here. Let's go ahead and pull it up on the full screen here, Benzinga Pro. You could see, multiple attempts to get above this $10 level. You had this run up, this big wick candle. You had this big wick candle. What I like to see here is that $9 price point holding here. So let me at least draw this out for you here. So, if you took this point and you just kind of drew it all the way across, you're starting to see how that stock is holding these levels in this area. And this is kind of the what I would start to look for to see, okay, so we're starting to hold up there. I want to see maybe a pullback closer towards this $9 area, but you're definitely starting to see that good volume. It pushed on up there in the 15 minutes up there to 1080. So definitely look for maybe some pullbacks here, but this one's definitely getting strong on the daily chart. If you look at it, you have those multiple resistance that it's broken out of, and now getting a little bit of volume pump. you got to keep an eye on this one, but not a bad one to bring up. So appreciate you bringing that one up, Jess. Let me take a look at the daily chart so that you could see that resistance right there. Look at this. You see how that's kind of building up there? Now we need to see that nice volume pop continuation happen, heading towards this kind of $12 resistance area, and then it could maybe do that attempt towards that 30. We're going to need a lot of volume to make this one get above through those levels. As you see, when this stock went up there on kind of a rocket mood, it had quite a substantial amount of volume there. So definitely pay attention to the volume on this one to see if we can get that same kind of volume. I think it traded 348 million shares, and now it's only trading 4.2 million. So look at the relative volume in this stock. All right, guys, definitely want to go ahead and get into some of the IPOs here. So I'm going to go ahead and touch some of this, and then we'll get into trying to get our guest on here. So let's go ahead and let's get into some of the IPO watch list here. One of the cool things of Benzinga Pro is that you can just change your watch list, as simple as that. Boom, I'm on the watch list. Let's talk about one that I really like, guys, Fubu. Want to definitely start working on this one. So let's get into that. But before then, I'm going to go ahead and bring in a quick mention from Benzinga Pro. All right, guys, and we're back. All right, let's go ahead. And I really want to get into this IPO section. It looks like we have our guest ready, so I definitely want to have Chris bring him on in. So go ahead, Chris, introduce him, and let's bring him on.
Awesome. Yeah, I know there's been a lot of questions about IPOs, and we're excited because today our guest is Don Butler. Don is the managing director of Thomvest Ventures and works with entrepreneurs in the areas of financial technology and marketing technology. Together with the Thomvest team, his investments have included Figure, Kabbage, Ladder Life, LendingClub, LendUp, Orchard, PeerStreet, Ribbon, SoFi, Zendrive. In marketing, DataXu, which was acquired by Roku, NetBase, Singular, and Vungle, acquired by Blackstone. He also was an investor in Cylance, FlashSoft, GuardianEdge, and Okina. So Don, thanks for joining us today. We're happy to have you on and looking forward to talking about some IPOs and some SPACs with you.
Yeah, no, it's a pleasure to be here with you. And, it's funny hearing the introduction. I'm reminded how old I feel now. We've been investing, across different cycles. And I think, February will be 21 years working with Peter Thompson in the venture world. And hence, I think this is now sort of our third cycle that we're working through. So pleasure to be with you, and certainly an exciting time to be talking about the IPO market as well.
Yeah, super awesome. Super excited to have you on here, Don. Like you said, you've been through a lot of these cycles, so this is exactly why we have you on here, bringing you guys the experts, guys. This is what we do this for. So I'm gonna let Chris go ahead and get right into the questions here. So let's go ahead and let's nail these IPOs.
Yeah, so Don, a couple huge IPO announcements recently. Airbnb, Doordash, we have Instacart coming next year, and Roblox announced last night. So let's start with Doordash. Look like they're a big pandemic winner here. Kind of your thoughts. Is now the perfect time for this company to go public? What is Uber's quarterly report? Does that help the valuation here? And does Lyft saying they're exploring food delivery hurt the long-term outlook at all?
It's interesting because as you think about timing, I actually personally I feel like it's perfect timing for them to be going public. And part of the reason is that if you think about it, what the pandemic has produced when it comes to companies and company performance, and we see this across our portfolio as well, is that you sort of have COVID winners and COVID losers, or COVID impacted to the positive or to the negative. And obviously with delivery, DoorDash I think has been a tremendous beneficiary in some ways of the sort of change in consumer behavior that we're seeing. The other thing I would think about whenever we've had companies going public is that obviously typically, if it's the normal process, you're subject to like a 6-month lockup. It could also be longer if the company decides to, sort of aggregate all of the investor sale demand and put it into like a secondary follow-on financing. And so, if I were an investor in the company, I'd probably be sitting there saying, I've got a couple quarters of pandemic-driven performance, and at the same time, if I'm thinking about a lockup coming off in 6 months, then I'm also thinking that this pandemic-driven sort of behavioral change that we've seen is probably going to still be going on at that time. If I wait too much longer, I might be concerned that I'd start to see some quarters coming in that showed a bit of a return to normal and people going back out to eat for restaurants. So I actually think timing is actually about as well timed as it could be.
Awesome. And then, so on the flip side there, talking about timing, so then we have Airbnb hurt by the pandemic the start of this year. I read the filing. It looks like numbers are starting to come back a little bit. You're starting to see people take those short-term trips, book these home rentals. Is now the right time for them, or should they have kind of waited out the pandemic to, have some better numbers in the filing?
That one, it's interesting because I probably was a little bit surprised that they were going out now, simply because you would expect that as things go back to normal, they would see a healthier return to their business. And so, perhaps it's the shareholders deciding that they're going to take a little bit more risk, that they won't get exactly the valuation that they might have gotten if they'd waited another quarter or two. And so I'm a little bit surprised that they picked now. And, what I find interesting, if you look at the filing, is, one thing you see sort of a nice recovery in sort of stays for in-country travel. You might have seen the same thing. But if you look at people who are traveling outside of their home country, those Airbnb stays are way off. And, in hindsight, it's sort of like, you look at it and say, okay, I see that, the main part of your business has recovered nicely with people staying locally and also trying to avoid hotels. But a material part of the business has not recovered. And so in that one, it feels like I would expect that the performance in like the later quarters of next year would actually continue sort of an up and to the right sort of trend as we start to hopefully get back to something that feels a little more normal.
Awesome. And then, so Instacart was another one that surprised me. It looks like they're trying to get a $30 billion valuation when they go public next year. Last month, they raised money at a $17.7 billion valuation. Do you think that move up is, justified here based on the pandemic and the increased demand for their product offering? Or, are we going to see a pullback when they actually go public and announce details? That's interesting because, when you think about it, I certainly think the timing, kind of like with Doordash, timing makes sense to me. The valuation, we haven't sort of done a deep dive. Oftentimes we'll do like a teardown of an S1 and look at it. And we've done that with things like Open Door or other sort of recent, not IPOs, but SPACs. But, there I would have expected that it's kind of a question of companies like them are benefiting from the changing consumer behavior that we're seeing because of the pandemic. Is it a 2x change and does it stick throughout next year? That feels robust. It feels like a robust assumption. But then again, if you look at like Snowflake, and I love the product. I have friends who were early investors in the company and think extremely highly of the company. At the same time, I think we've seen eye-popping valuations on companies that have gone public this year. And I guess one other commentary I would offer is, if you look at high growth SaaS companies serving the enterprise software space, and this is just speaking to like public market valuations, the median high growth SaaS company was trading at something like a 10x revenue multiple prior to I think coming into the year. And right now, I think those are trading at like a 20x revenue multiple. And so we've seen this multiple expansion in the public markets that's driven by a host of factors. And in some ways, when I hear sort of the valuation expectations, part of me wonders, is that an assumption that multiple expansion we've seen or these kind of valuation metrics that we've seen will continue? Then the last one, Roblox. So they filed S1 last night. I haven't had a chance to deep dive into it. It's a popular game. I have young kids. I know this brand. They've seen tremendous growth during the pandemic. They've been a top 5 grossing game for quite a while now. Do you have some initial thoughts on this company and that filing?
I haven't gone through the filing. It's funny because we were expecting the filing to come. I haven't gone through it, but we were investors in a company called Vungle, sold it, about a year ago to Blackstone. And Vungle basically did those videos. When you're playing a game and you see a video for another game that is also sort of like a 15-second video, they're one of the leading players in that market. And so, as I've sort of kept in touch with some of the team there, obviously they've been a tremendous beneficiary of stay-at-home orders and sort of this reshifting in the economy. And so I'm very bullish on the gaming market because one other thing is, if you think about it, and it'll come as no surprise, but this pandemic and work from home have sort of shifted the budget for consumers and how they spend money on entertainment. And as a result of that, I think Roblox is a tremendous beneficiary, but also we've seen that even across other gaming companies. And the thing that's interesting is they're training future customers, and so I think the amount of engagement and the time that they'll or the monetization that they'll see will be tremendous going forward. And the last thing I'd say is that if you look at Roblox or you look at how Minecraft works or other things, they've built up these awesome user communities. So I've another firm that I have a tremendous amount of respect for that we know, Altos Ventures, was I think maybe the original Series A investor in Roblox. And I remember talking with one of my friends over there who said that as the company was getting going, they were quite surprised because I think they had a big following in Korea. And as they were getting going, they had a user conference that they had arranged out here in San Jose. And, they see some good engagement metrics. They think things are going well. And like 5,000 people showed up at the user conference. And it was one of these things where at that time it was still a small company. And they're like, oh my goodness, look at the number of people, parents and their kids that are actually flying in from different parts of the world just to be here at this user conference. And so, to promote that kind of engagement and loyalty for a game or a platform like that, I think just speaks volumes to the quality of what they built.
Yeah, I just want to jump in here really quickly. Don, I've really been watching one Corsair Gaming. This was an IPO that was really on my watch, just because at the end of the day, like you mentioned, when you talk about gaming, we're going to probably talk about fanatical fans. And when you're in any industry that has those fanatical fans, you definitely do see that interest and kind of the movement into gaming. I think it just really gotten started. With VR also, I think a lot of people are not paying attention to the VR plays. I think this is going to be the year, 2021, where you'll see more of those VR plays come out. And what do you think about Corsair Gaming and maybe the potential of VR in the 2021 industry?
It's interesting. I feel like so many of the people that I know in the venture industry also have kids who've gone through this pandemic and then have learned all of the inefficiencies and how either training is playing or have seen opportunities in, whether it's training or gaming or education. And so, what I'm hearing anecdotally is that this is like the year to be investing in that category. More specifically, I think you realize that there's so much more we can do in terms of being efficient in whether it's education or in training in particular. And, the one other thing I would say is that when you look at what we've seen on the gaming side of things, I do feel like there's so much more potential. And in a way, I feel like, some shifts that we've seen, like kind of thinking about what we were talking about earlier with the shift to Doordash or things like that. I think some shifts we'll see some reversion back to what we had before in areas like gaming or education, where this pandemic has created a shift. I don't know that we're going to see a reversion back to that'll be anything like, the level at which we'll go back to restaurants. I think, when you think about entertainment or you think about education, I think there's a lot of people now who are saying, gosh, I'm either discovering gaming or I'm discovering online courses. I'm discovering, for myself, I had not attended Khan Academy courses before, and suddenly you get exposed to that, you try that, and you're like, this is actually quite impressive. And so I actually think some of the shifts that have happened in the economy from this pandemic are ones that we'll see stick going forward in 2021.
Yeah, thank you, Don. One of the things that I definitely saw was kind of a rapid move towards the transition to digital, and I think that's kind of what you're kind of mentioning here. Also, definitely you're seeing the shift speed up. If anything, there's been an acceleration, I think, in the gaming industry, and that's what you're seeing.
Yeah, well, it's funny. The other thing we've seen, and you mentioned Ladder Life in one of our companies, so that's online direct life insurance. And this is a company that had been around for a couple of years, but if you think about it, there's all these other host of things you might buy, whether it's, home insurance, auto insurance, life insurance, that used to be, you would drive by and see like a local Allstate brokerage or a State Farm brokerage and be like, hey, maybe that's where I'll go and I'll talk to a broker and I'll do. And like, I think a lot of that is now shifting online. And once people go there, it's kind of like, gosh, that was easy, and I don't know if you looked at like Lemonade for renters insurance. But we were just looking at that last night because we weren't investors, but we'd done a teardown of the original filing for the company, and I think their NPS score is like 71 versus an industry average of like 17, and it just shows you that to the sort of topic of changes that are going to stick when this whole thing goes back. I feel like there's a host of things that for IPO investors opens up new companies to invest in. I think similarly for SPAC investors, and then lastly for folks in the venture world, and in some ways it's kind of funny. 2021 is on track to be potentially a record year for investment in venture-backed companies. And you sort of look at that, and past downturns, there's always been like a 15 to 25% contraction in dollars going out into startups. And this year it's like, no, it's game on. There's so many opportunities that this is exposed that I think we could see like a record year in venture investment into companies. And that also goes upstream. If you look at contributions of limited partners into venture capital funds, that's also on track to be a near record year.
Awesome. So you mentioned 2021 a little bit. We talked about some of the bigger names here. I don't know if you can get into specific companies with your venture, but what are some names kind of on your radar that may IPO in 2021?
Well, it's funny. On the gaming thread, there's another company that we competed against when we were investors in Vungle that I would expect might go public, called AppLovin. And AppLovin, I think I have a lot of respect for them, in part because they've taken so little venture capital and yet have built a very large company, and one that's also not just and we're not investors in the company, but I think not just large and growing, but also highly profitable. And if you think about that combination, most of the things we've seen are like pursuing growth at the expense of profitability. And here I expect AppLovin, if they do come out in 2021, we'll see this kind of rare, combination of high growth and one that's also benefited from the pandemic, I suspect, and a high degree of profitability. So that's one. Another one, and again, we're not investors in it, but that I'm expecting that I have a lot of respect for is Affirm. This is Max Levkin's company that does sort of point of sale financing. And the thing that's interesting is if you look at what's going on in the fintech world, and that's an area where we spend a lot of time investing, that whole world is sort of getting remade. Certainly payments has received, a tremendous shot in the arm from what's happened in 2020. I think AppLovin and a number of other companies are beneficiaries of that. So those would be two of the names that we were anticipating. It's funny because a third name we were anticipating was actually Roblox. And so, to be candid, I didn't realize that they had filed last night. I knew it was coming. I just didn't realize it was going to come last night, or I would have looked at this.
Awesome. Those are some good names. I hope everyone in the chat, you guys heard those. What about 2020? So this year with IPOs, have there been any that have kind of surprised you with either their pricing level or their trade up or down initially after the IPO?
The biggest surprise to me, and it continues to be the big surprise for me, is Snowflake. I'd say Morgan Stanley came out with a report on the company, and the report on the company, highly positive. And again, this is not one where we're investors, but have a lot of respect for them. But they're sitting out there at I was just looking at this last night. It's $73 billion market cap, price to sales trailing 12 months of 138x. And those are like feels like pricing baked in and then some. And then the second thing is, if you look at the market that they're in, at least today, the online analytical processing market, the OLAP market, according to the Morgan Stanley research, they have 0.9% of that market. And so, sometimes you see the capital markets race ahead of the operating market. And so this is one of those instances where it feels like there's so much growth in the name already priced in that I'm really surprised at where they've gone to. And the second one that I would say surprised me this year was Lemonade and the valuation that they've got, because right now, if you look at it, and again, this is from yesterday's numbers, but $3.5 billion market cap, trading at 35 times trailing 12-month sales. And in the insurance industry, if you look at it by contrast, carriers trade on usually like a different set of multiples, but if you looked at it on the same comparable basis of trailing 12 months, price to sales, that'd be like 1x. Right? And so, the thing that we'd seen, because we were investors in LendingClub and no longer holders of the name, but we were investors in LendingClub, and one of the things we had seen was oftentimes the market is sort of figuring out the behavior, the financial performance of a company, and at some point the market might deem that not a enterprise SaaS company or a high growth consumer name, but might deem it an insurance company. And if that happens, we might see it shift off of that multiple onto something like a carrier multiple. And so the fact that they've been able to maintain that type of market to sales multiple, I think is impressive. And love the brand, love what they're doing. I think there's tons of great consumer engagement, but I've been surprised at that. And as I was alluding to Snowflake, how high those companies are trading at.
Okay. I want to turn the attention a little bit to SPACs here. So big trend of 2020, obviously, that's one of the big focuses of this show. We saw huge demand for SPACs, a lot of attention, and then the market seemed to kind of, turn their eyes away from it. And now it seems like it's roaring back up again. We've had a lot of, new SPACs announced, new deals announced. I was wondering if you could kind of touch on your overall thoughts of the SPAC market. Is it coming back? What do the trends look like, for someone like you?
It's been interesting because we've had several of our companies in discussions with sponsors and talking about this. And I've also spoken with, financial sponsors who are looking for companies. And as we've looked at this, I think it opens up a host of opportunities for companies that are looking to access the public markets. At the same time, in full disclosure, I'm an investor in a couple of these names that I'll mention, but one of the things that I actually really like about SPACs is that it gives you a chance to back an investor. And when I think about the ones that I've recently invested in, they're usually SPACs that have been put together by somebody that I know to be an extremely good investor. And in some instances, this is also their first SPAC. And so as a result of that, I think they're going to take extra care to try to make sure that the incentives are aligned and that the company performs so that they earn their way into doing subsequent SPACs. And the thing that's exciting to me about it is that in a way you do sort of get to bet on the manager and then see the name and then bet on the name if you want to go forward with it. One of the things that I think is kind of, this would be an older guy's observation, but I think one of the things that's sort of interesting is that if you look at the history of venture capital, in the early days of venture capital, we didn't have the funds formed that invested in multiple companies. It was typically company by company. And so I think in some ways, what you see with a SPAC is kind of like it's come full circle. You're betting on a manager who's going to find a company, and then you're going to bet on that company. And you have the option to pull out if you don't like that company. And the only difference here versus like the early days of venture capital, I think, is that we're doing it obviously in the public markets. I do think that introduces a host of changes that are quite different, a lot of considerations that you wouldn't have had in the early days. But in some ways, it actually reminds me of where venture started. And then on the pullback, the one thing I am hearing is I think the markets are getting sort of accustomed, especially with the volume that we have, to sort of the SPAC volumes and sort of the performance of these companies. And one of the things I'd heard earlier this week is, as part of bringing along all of that ecosystem of the market into the sort of actively participating in the sort of the SPAC, I call it, method of going public. One thing you're seeing is that carriers who provide like directors and officers insurance have sort of gotten a little bit more nervous in the last couple of months about sort of the exposure that they have. And so rates for like D&O insurance have gone up pretty dramatically. And I think it just shows you that, to me, it sort of highlights all the different participants in this ecosystem, and that to have this as kind of a high volume functioning method of going public, you've got to sort of bring the whole community, whether it's, insurance providers for directors and officers insurance, or, accounting firms or other things. You sort of need to bring all of that accoutrement with you. And so I think part of what we've seen, post the initial sort of ramp up of the initial offerings for SPAC, now I think we're starting to see the rest of the ecosystem come along.
Okay. Last question here. And we hate to get too political here, but we talk about this story all the time. Yeah. So it looks like, changing a presidency. So I'm wondering, what IPOs and SPACs do you think could be good plays on a Joe Biden presidency here?
It's interesting. As we look at it, I think that in some ways, and this might be a contrarian view, but in some ways, as long as we have the Senate still divided, I don't know how much will actually change. So, it might be that I don't know that it's going to be as much of an impact as we might have seen if we had different sort of results. But the one thing I would say, though, is that, if I look at companies that I do think will be candidates going forward, like the firms of the world, or, and I'll stick with an area that we focus on in particular, which is financial services and fintech. I think that we'll see puts and takes in certain areas, and sort of something that we'll get as a benefit will be open banking and sort of all of the regulations around open banking. It's like, hey, this is going to do much better now, because certainly telling the posture of the administration that's sort of enforcing the law of the land now will be, I think, more focused on ensuring that consumers have access to their financial data, regardless of which financial institution hosts that data. So I think you'll see some things like that benefit. At the same time, I wouldn't be surprised to see under a Biden administration a stronger CFPB. And so, if you're serving, consumers with a higher percentage APR credit card or other financial product that's kind of coming up to, rates that are, closer to where people are comfortable, then I think you're going to be under more scrutiny than you would have otherwise been. And so, I think it depends on the specific part, in this case, using sort of financial services and fintech as an example, depends on, your posture vis-a-vis consumers. I think that's one of the big dividing lines we're going to see is, something that's probably more pro-consumer and consumer protection and consumer data protection, and maybe a little bit less pro-enterprise.
Yeah, really great job, Don. I definitely want to thank you, especially our viewers in the chat, definitely giving out a thank you to you. Great information covering a wide range here. One last one that I want to see if you have some opinions on, and this is one that I made a call a little bit closer a couple weeks ago, is one that I was watching was Fubo. When it moved from the OTC into the New York Stock Exchange. This is in, one of the things that I watched is the sports kind of media and everything coming all at once. I think this was a perfectly timed move into the market. And so what do you think about the timing of about this stock?
I wish I could comment on it, but actually I haven't been following that one as much. So,
I got one for you to look at, Don.
Yeah, no, I'll take a look at it. It sounds like one I should be looking at. I think one of the downsides of being hyper focused on certain industries is that we sometimes miss really interesting things going on in adjacency. So I'll take a look at that.
Hey, that's why we listen to you on certain areas, and that's why.
Yeah, I listen to you on others. Yeah.
Hey, that's why I do what I can and try to bring information to our viewers. So thank you very much. I'll let Chris give the farewell here, but thank you for joining us.
Yeah, no, thank you. Really appreciate it. Yeah, it's great.
Thank you, Don.
Thanks. Thank you. Thanks, bye.
All right, guys. So thanks for joining us this week, our first full week of SPACs Attack. We brought you 3 great guests this week. You had 2 exclusive CEO interviews Oh, we brought you 4 guests this week, 2 exclusive CEO interviews, and then we had 2 industry experts on SPACs and IPOs. We have a huge show on Monday. For those of you who stuck around to the end here, I am happy to announce that on Monday we have Will Hershey of Roundhill Investments joining us. He runs 2 ETFs that are in our coverage area that people are constantly asking about. So gaming, they run the NERD ETF, symbol NERD. And then sports betting, they run BETS, the only pure play sports betting ETF, BETZ. We are going to be digging deep, finding out his thoughts on sports betting, gaming. So I see you guys with those tickers, LCA, FEAC. We are going to ask him, why did he include those in the ETF? What does he see for the market going forward? You do not want to miss that show on Monday. So thanks everyone again for tuning in. Tell your friends, share this link. Go back and watch the old videos. I'm sure there's stuff you guys can get out of those as well. So great week, Mitch. We're looking forward to it again. Hit like, hit subscribe, and we'll catch you next week.
Yep. Like always, guys, you'll catch us on the SPACs Attack.